Hello everybody, welcome to another video here on my channel. This is episode 11 of my Chart Annotations Review Series. So, to sort of summarize, the past 2 weeks has been the 10 episodes. It's an episode per day. So, I'm going to be adding a couple new things. Number one is I'm going to talk a little bit more about entries. I used to just put the entries down, right? Show you where price is going to go. Now I'm kind of going to study and go over like first entries, you know, like the different kind of entries, second entries, third entries, right? Stuff like that. I'm also going to do a little bit more stuff on the higher time frame. So whenever I'm recording this, I actually have this on my other monitor. So this right here sort of helps me look at things on a bigger time frame. I'm going to start using that now. Actually, probably not during the videos. I usually just do that when I'm charting things. But we go to the 15-minute here. You can see there's a lot more structure, a lot more to add. I've been kind of just going over the intraday structure as if you didn't have a bias, but now we're going to be adding the external structure in confluence with it to make our trades more probable, right? So it is a little hard to see because of all these annotations, but if we go to the, let's just start off with the weekly time frame. Now you can see, obviously you can't see anything inside of here. It's kind of annoying, so I'll just do this. So on the weekly time frame, you can see sort of all the history of price action. This goes back to 1999, right? But right here, this is sort of looking like we came up, had a dip down, okay? We came up again, broke these all-time highs, and for a long time, you can see right here, we had a lot of consolidation. It really went nowhere for multiple weeks. And then we had a sell-off, and I was thinking this sell-off could have possibly, since we took all-time highs, I was thinking, well, we consolidated up here, we're slowing down, sell-off. I was thinking this could have been sort of a breakaway gap right here, even maybe, to then start targeting these lows, right? Or maybe even just target this low to go higher. But I wanted to see a sell-off for a little while, and what actually happened, we hit, right here, we hit the yearly open, and we also basically rejected off of this massive order block, right? This right here is a weekly order block. And so we basically just came down, reacted off of that. And now we're heading higher. And once again, just like before, we've taken all-time highs again. And so now we're kind of just waiting to see what happens in here. If we go down the daily, this is sort of just zoomed in a little bit. Right, had all these days to where we took all-time highs in the past and we were just slowing down. Action was terrible. And then we sold off. Right, I got a good decent amount of trades on this sell-off. But now we just are coming back up, and I really haven't traded anywhere that you see in this time right here. I have not really traded at all. It's kind of been a while. That's just because I've been working on a bunch of other work and really catching up on this series. But right here, this is where we are in the market. We're all the way up here. And I'll probably go over that. I'm going to start going over that for now on. Like sort of that higher time frame stuff, like this 4 hour. So right here, we took all-time highs. What happens if after we take these all-time highs, we kind of sell off, but we kind of go up. So on this 4 hour, you want to take notice of what's being respected. So right here we have, and these annotations kind of make it annoying, but right here we have all-time highs hit, and we have a fair value gap, 4 hour fair value gap, and we bounce off of it. So this fair value gap gets respected. It's a very prominent fair value gap. Now this one right here, there's a smaller one right here. This one kind of gets respected, but it's not that prominent. To the model. So if you were to take, like, for example, discount of this, you could see we tap in a discount, which is aligned with this bigger fair value gap. We respect halfway point of the fair value gap, the CE. Or sorry, consequent encroachment. Yeah, it's CE. But again, you could see after we respect that, we respect this 4 hour. And we respect this 4 hour. Okay, we also respect this 4 hour because none of these bodies of the candle close below this wick. So we've been respecting all these 4 hours, and then up here we just had a massive dump. We actually were just wanting to take out all this liquidity down here and just to then push higher and also previously respect this fair value gap. But you want to kind of wait to see, are we going to respect any bearish fair value gaps? We've had this one right here. This is the first bearish fair value gap we see in a long time, right? We also have this one, but this one was stronger. We have this bearish fair value gap, but you can see we did not respect it. We just went straight through it. And then we actually used it back again. Did we use it back again? Yeah, we used it again as an inverse right here. We came up, came back down, and tapped into it. So looking at this chart, we're very bullish. There's nothing that tells us we shouldn't go up to this high, yet you don't want to use this structure alone because, well, also we have this wick, which could be a reaction point. But we can still go lower just because there's not really a fair value gap that we're going into. So maybe something we may want to do would be to stop here, right? Price could easily stop here. This could basically be a sweep of these highs to then go lower. And maybe we want to go ahead and respect this fair value gap again. Or maybe we want to take out this low and head lower into, let's say, a daily fair value gap. Maybe we want to come down, sweep this low, just tap into this fair value gap. Or maybe tap into this one, right? Maybe we want to come down here and tap into a discount of this range just to then go higher. So looking at a bigger time frame kind of negates that. But, you know, we go into smaller time frames and you can kind of see what's going to happen next. So here we're just kind of bullish at the moment. We do have this 1 hour fair value gap though that we're inside of, this bearish one that we have respected once, twice, and sort of 3 times. So we may respect it again. And then this is where price just kind of gets closer to intraday action. This is 15 minute. You can see this is what things look like. And then go to the 5 minute and go to then the 1 minute. Okay, so first thing I want to take note, we go to the 15 minute. This is where I kind of do my annotations. Monday, I did not annotate any structure because it was a holiday, so there was really no good action. Not any action that I really want to annotate. I guess the only thing, from this time frame, you can kind of see we have bullish squeeze. So we have this pattern, right? Zigzags, goes into this little point and does blast off, and then we come back down, actually tap this. We tap this, right? This could be sort of an accumulation, right? This could be used back again as discount or as what is it? Support. Yeah, that's what I'm looking for. We come up to here though, and this is kind of just where we're starting our day. So going into the 1 minute here, this is Tuesday morning. This is going to be episodes 11 and 12. Technically episode 11 is just Monday's action, but there's no episode 11, so it's going to be 11 and 12. Also, I kind of did explain a little bit about the external time frame, so that can, I guess, count as Monday, or as episode 11. So right here, we just took out this buy side. This is a pretty external buy side, and we're still running up. This is kind of overnight structure, but we're starting here at 5 a.m. So this is where I'm going to watch some structure, some action. Let's see what happens here. So sort of just having an uptrend, but this is the first low that gets like taken out and displaced through. We come up, respect this order block. Now I want to see us flip to the downside, right? There's a couple things I want to see if we're flipping to the downside. One, I want to see a recent low displaced, like this. Not swept, I want to see it actually close below. And then I want to see us come and retrace to previous PD array in the leg down and respect it and have displacement down, just like this. This right here would show me that we're pretty bearish. This right here wouldn't count. This is just a sweep. This could just be a sweep to tap into this gap right here, just to then go higher. So we tap this order block. I'll annotate this out. We sell off, take this low, come back up, we form an SMT. After I get this candle, we come down here. I expect this to be protected. We should not go back up to here. And we take out this SMT TP. So another nice thing is that if you're seeing an SMT, you kind of want it to be in relationship to the draw of liquidity. So for example, if we had this, we respected this order block right here, came down, but formed SMT down here. Let's say we formed it right here, displacement up. Most likely, like this would right here be the protected low. Most likely, if the trend already shows us, or you know, the evidence of us breaking structure and reacting off a PD array, if that shows us that we're bearish, most likely a bullish PD or a bullish SMT won't work. So SMTs are only supposed to be used in confluence with what's going on, and they can also they're able to indicate reversals, but are not 100% accurate. Just like basically everything else. So right here, we come down, take out this SMT TP, and we hit this previously respected 1 minute. And we get a little bit of displacement up. So right here, if I saw this, I would honestly be looking to target this protected high. So I'd want to see a pullback into this fair value gap, or this one right here. But no, we just come straight up to the protected high, and that's kind of the difficult thing about trading, is finding entries. So that's why it is good to know where price is going to go, but also it's good to also know when to take an entry. But don't worry, because stuff like this happens all the time. There's so many models that are obviously following the algorithm, but the actual hard thing is finding entries for those models and staying disciplined with them. So we come down right here. We have this SMT, this little small SMT. I really wouldn't think much about it. I would just think that, well, we came up, swept this protected high. We did not tap into this one minute though. We tapped next to it. But after I saw this SMT, I expect this just to get some sort of sell off. So we sell off here, create another SMT. And the reason this one can be hit now is because this SMT could work, because this is the swing high and we can easily retrace the discount of this leg. So right here we come up, and right here we have SMT TP heat, and we also, let me see, out of this range right here, let's use this way. So right here, this is all OTE range. This is kind of the middle of OT. This is where golden ratio starts. You can see we come here, we wick this bottom part a lot, create SMT, get nice displacement up. I want to see this possible, this is a protected high. I want to see this get hit and us go into this 1 minute fair value gap and sort of respect it. So that's what I'm looking for. We also have a macro right here, and we could expect to see a reverse up here. So I want us to have an uptrend going into this macro. So right here could be an entry. You have displacement up. This is the fair value gap that you see. If you wanted to be cautious, you could play it off a discount. So we tapped in a discount and go into this 1 minute, you could take it. It just depends on the person that you are. So here you can have a first entry. We tap into it and you could actually put an entry at discount. You could see right here, we exactly tap discount. So if you put a position here, you would be perfectly put in with no trail, right? With no trailing drawdown. And we buy back up. So this could be first entry in this for value gap, maybe in this PD array. And then second entry would be the second respect of the fair value gap or order block or any PD array that's made. So number one, this is your market structure shift. Okay, just like over here, going below this low, going up here is your market structure shift. So I want to see this fair value gap get respected before I put on like a lot of size. So if I was to put in a position right here, I'd probably put some starter contracts in, or I would just wait for this to get respected. So right here, this would be considered a first entry. It's the first entry I would take. First entry in the model. So we come up, we respect this, right? And now that we're out of here and we closed up here, I want to see us come back down to probably respect this order block. So we come down, we're in the order block. You can put your entry right here. You can put your stop down at this low. Maybe put your stop to where your original entry was. And you just start to ride this up because it got respected, and then you look to take some off at this high right here. You can see we also create an SMT up here, and we're having displacement down. So right here, this fair value gap would be first entry if we take it. So not this right here, but this. So we can mark first entry here. Get some displacement down. This order block could be second entry if we come up to it. But right here, we take out the low here. There's no opportunity for for a second entry. But again, if you know where the draw of liquidity is, like for example, right here, we had a macro, we had this SMT, we had this 1 minute fair value gap. If we go down to here, just from this little move right here, I would expect us to reverse because we're also in a macro. You know, we have all the things aligning for us to reverse. So I would not be worried about taking a first entry right here. It sort of depends on how probable the model is, whether I'd take a first entry or not. So, yeah, take some water. All right. So, we're at this low. It's still only 6 a.m. here. I gotta kind of speed this up a bit. But we end up selling off a bunch. So now we create an SMT down here, displacement up. This fair value gap could be first entry. So in your mind right now, tell me, would I personally take, or would you take this first entry right here? Would you take this? If you said yes, probably not a good idea. So I would not take this because, first of all, we came down. How do you know we're stopping here? Yeah, we have an SMT. There's nothing really telling us that we're stopping here, unless you had some sort of manipulation up here that came down to it. So let's say we marked this as manipulation. And it's possible it could end up down here. See, it came way below. So how do you know we would stop here? Because like we didn't even, I mean, we swept these two liquidities. We didn't even take this liquidity out. How do we know that we're done? We don't know, right? So I would want to see this get respected to show that we're now flipping to the bullish side after forming this SMT before I take an entry. but you could take one here. You could definitely take one here, and obviously these videos still show that this works, this happens, but in this case, look at this right here. We did not respect it. We came up. Some people may take an entry right here, but then they're like, it comes down, takes the protected low. They're like, why did that not work? Well, it's because you have to take it in confluence with what price is telling you. We came down here, but there's not enough structure to show that we want to go higher. So that's actually exactly why this got taken out. So now we come up here and we form a little more structure. So we have a bullish move after this low gets taken. And then right here, we have an SMT created tapping into this fair value gap. So right here is a really small model, right? The SMT TP is up here. This is a super small model compared to, for example, this model, right? It's fractals. This model right here, where it's an SMT displacement up, it's the exact same thing. SMT, well, it's sort of the same thing right here, right? This right here is like the same as this. It's just fractaled down. So right here, we tap into this 1 minute. So are we going to respect it? Yes, and we actually just take out the SMT TP right away. So that's kind of like an example trade that's kind of hard to take, but you could still definitely take it. Now, up here is your original SMT TP for this, but it gets disrespected, so I would not be thinking of this as an SMT TP. I would just be thinking of it as a high. Right here we actually come up though, and we make an SMT. So technically this protected high, or this becomes a protected high now, and technically this SMT TP or high gets taken. So now we sell off. Right, I'd be wanting to see us tap into a fair value gap, but we end up taking this protected low. Just sort of consolidating here. We come down, take this low right here. That forms an SMT. So this is a little more probable. Instead of just an SMT here, we actually come down, sweep a low, just rejection off, form an SMT. So there's really no opportunity for an entry here. Right here, we're in two fair value gaps. I want to see if one gets respected. It doesn't, right? We just keep selling off. So now we're entering a macro, and we have sort of like a, I don't know what trend I would call this, but let's see if we pick a direction from this macro. So the macro, we pick it up direction. I'd want to see, are we going to respect this fair value gap? We're sort of not. Right, this is this fair value gap gets respected, so we're heading lower. Right here we're heading higher. I just want to see a PD get respected and displaced off of. Yeah, this really nothing much happened here. I'm gonna extend this out. But we form an SMT right here, and now we're going into a macro with a downtrend. So now I want to see us displaced to the upside. So here's some displacement. We have a fair value gap here, gets disrespected. So yeah, once again, macro right here didn't really do anything. This is the protected low though. This low should not get taken out. So right here, just create equal lows, triple equal lows, and then we just decided to form an SMT right here and take this out. So again, this really didn't have to get taken out, or this SMT didn't have to get hit up here, because there was nothing really respecting that it would. We had a little trace right here to the upside, but we didn't really respect off any PD arrays to go higher. The only thing that I did see here that was kind of nice was that we have a fair value gap that we tapped into. By the time this fair value gap was not previously respected. So here, we're in the fair value gap a bunch, but we just ended up going through. We take out this protected low right here. Okay, so now we come back up. Still have no bias. Still don't see anything. Alright, so now we're going into a macro with an uptrend. So I would want to see possible to get the reverse of this move. I want to see us possibly go and displace down below recent low. So here we're kind of just going all over the place. This is before market open, though. This is my least favorite macro to trade. But right here, we come up, and this is sort of acted like a sweep, and this is definitely a manipulation leg. So we come up, we take out this protected high, take out this previous SMT. Actually, this is not going to be one. It kind of is, but it got disrespected after this low was taken. We also have this previously protected high. So these all just got taken. Right after it got taken, instant displacement to the downside. And with what I've learned, if you see this right here, you can probably take, this is like the best, this is the best strategy to trade the market open. After you see the initial move, if it takes out what you wanted to see beacon take out, plus it reacted into, came up into this 1 minute right here, this 5 minute, this 15 minute, and this 1 hour. So this shows we're definitely going to head a lot lower. Possible fair value gap entry you can do right here. For this specific model, I would call this as, yeah, I'll do this as first entry. You could also have an entry like maybe halfway of this candle or maybe above this candle. I don't know. Anything on a smaller time frame than the 1 minute, but I would not do that. So here's first entry and this fair value gap. Honestly, I probably would get stopped because I'd put my stop at the top of this high. This would be a, yeah, this would be about a 10-point stop. This is where my stop would be. That's why it's first entry. Really want to take it. I never really take trades right after market open, but that could be one. After this gets disrespected, though, I really wouldn't look to take another trade in the model. So I wouldn't look to take a second entry trade because the first entry didn't even work. Okay, so now we're going down and we finished the 2.5 standard deviation. We're entering a macro. Want to see what happens here. We're sort of consolidating into the macro. And we come and form an SMT right here. You can also see that this 1 minute fair value gap does get respected the entire time for the most part. So we have an SMT right here, displacement above this recent high, right? SMT TP is taken, but there's a protected low down here. I would like to take a long position if possible. So right here, this would be first entry for a long position. Because now we may reverse to the upside. Do be careful though, because if you're looking at this model, we should retrace to discount to then head lower. So in this case, since we have that against us, I probably wouldn't take first entry. I'd want to wait for second entry. Now right here we have an SMT because this is making higher highs while while ES is making lower highs. So this could be SMT, this could be SMT TP. Now we just swept this low. So I'd want to see, are we going to come up and respect that? So we have this, we kind of respect it again. We do disrespect this fair value gap. If I was to take a trade though, I want everything to be aligned up, right? I'm only taking like 1 to 3 trades a day. I'm not taking this. If I do, it's low size. You got to be careful with your money. You have to not gamble it. Wait for the right setup. So we have an SMT up here. Displacement down. This would be protected high. We actually come down, take out this SMT TP by forming an SMT here. This would also become a protected low. Now if I saw this, I have this confluence with this first entry, right? My stop would have been down here, probably. Okay, 1 second, guys. I've been paused for a while, and I have no idea when it paused. So I hope I did not just miss out on a lot of footage. That sucks. 1 second. Alright guys, I'm back. That was really unfortunate. Okay. That was like 15 minutes of recording I just lost. But right here, this would probably be my stop loss. And let's move up to now. I'm going to be repeating everything I just said. But we have an SMT right here. I want to see this protected high get taken. So that gets taken. We're moving up here into this macro. I want to see a possible reverso in this macro. So right here we form an SMT. We have a protected high right here then. Want to see displacement down. So here's our displacement down. And in this model, this would right here be turtle soup. So first entry would be in a fair value gap, the first fair value gap that we tap into, which is right here. And then I want to see us head lower. So right here, either we're tapping into discount of this leg to then go higher, or we're reversing more downwards. So that's why it is it's a little worrisome. But we end up right here kind of slowing down. And personally me, I would take my position off. If we got this sort of candle up, I would just take it off, because it's showing that we're respecting this discount. So that's not something I want to see, obviously. We come up, we take this protected high, form some more structure here. Going into this macro, we have a little bit of an uptrend. So I want to see something that'll kind of break that trend to go down. We have this trend break right here, but there's really nothing I would want to take into here. So we're sort of just consolidating here. We get another little displacement down. So if we were to tap into this fair value gap, I would take it now because there's something clear. But right here the macro finishes, and I think we tap into discount of this range too. Actually, do we tap into discount of this? No, we don't. So the macro just finishes here. We're also tapping into respected 1 minute. We come up, form this SMT. We sell instantly off of this SMT TP. We have this fair value gap that we tapped into. We did form an SMT here though. Came back up. I want to see this high get taken, maybe as like a sweep or something. We keep displacing more higher, and we end up taking this protected high. Still really nothing I would want to see. Maybe a possible entry in this in a 1 minute, but it does not get tapped into. So here we take this protected high, we get displacement down. This protected low is the draw on liquidity. If you knew your draw on liquidity pretty well, you knew where we are in the model. If you see this protected high get taken, right, we kind of just come back down right here. If you wanted to, you could take an entry into discount. So if we come up to discount, we tap this 1 minute, you could have C lower to take this protected low out. Now we're in a downtrend going into this macro. I want to see a possible move back up, right? And then right here we have displacement up, so possible entry in this 1 minute would be nice. We don't go above, we don't break structure to go higher, but that's why this could be first entry. You could take it if you're risky. So right there, you tap into it. We take this high out. Here's another 1 minute for value gap. Does not get respected though. We're sort of just consolidating a little bit. We do form an SMT right here though, and I would probably take possible entry if we form this SMT, because number one, we had this displacement up. Number two, we tap into this for value gap multiple times. Number three, we have an SMT showing that we want to go higher, and that is what the macro should do, and make us go higher because this was a previous downtrend. So here's protected high, gets targeted. We come up and we take out this high right here. So that would be your trade. And then right here, we form an SMT, displacement down. This would be your protected high. I would want to take an entry in a possible first for value gap that we form and tap into. So right here, here's the first fair value gap that we see. Do we tap into it? Yes, we do. You could take an entry off that. This would be first entry of Turtle Soup. Turtle Soup's when we have an SMT with displacement down. That's all it is. And first fair value gap is your entry. You ride this down to this previous low. We actually take this low out. This low is the SMT TP of this SMT right here. You get another entry, possible entry right here. I really wouldn't keep trading this though, because I don't know that we're going to stop going lower. Or I don't know that we would keep going lower. But then right here, we have some consolidation. And we have displacement up. Here's a possible fair value gap. So right here, this is market structure shift. We see this get respected. We come back up. And if we were to enter into another PD array, you could take that as a first entry. That would be my entry. But also we do tap discount and we have these PD arrays, so you could possibly go lower. Plus this fair value gap was respected in the past, so it could be respected again. So this fair value gap was respected again. Just gonna draw that out. Displacement down, we end up heading down and taking out both of these lows. Here we're just waiting for more structure. Okay, so now we're going into this macro with an uptrend. I want to see a possible downtrend move. We tap discount to this, waiting for something to signify a downtrend. This right here could signify it. So this could actually, right here, when we close below this, this can be your market structure shift. And then right here could be possible first entry. With this, you could target this previous low. So this is going to be target TP. So here's first entry. There's the TP that gets hit. And then after this gets hit, we form an SMT with displacement up. Could possibly see us tap into this 1 minute to then go higher. We don't tap into it. We don't tap into any of these, and we take out this SMT TP. We've also have a protected high up here. We come up, take this protected high. So this model is complete, and then we form a massive SMT above this model. And so I want to see this SMT TP get taken, and I want to see this become a protected high. But right here, we end up just consolidating because this is 4 p.m., right? Market just closed. And this is a great example too. We take out this protected high. This is our last liquidity target that we want to take out today. We take this out with high volume, and right after that gets taken out, we're just done. We consolidate. So that shows you that's the end of the day. So guys, that is all I have for this episode. And my next episodes are going to be 13 and 14, and then 15 and 16. So it's just the next 3 videos are going to be groups of 2. They're going to be a little longer, just because I do have a lot to catch up. But soon, whenever this week is done, starting next week, I'm going to do more outreach, get some more people into my server, and that is where I will start doing live trading with the Discord every day. And I'll also have, I'll also be reviewing action sort of as a charting session. And that's going to be added to my Chart Annotation Series review, so everybody can just watch that for free. But yeah, that's all I have for this video. Hope you all enjoyed, and I'll see you all in the next one.